Hey guys, it's September 3rd, Thursday. It is 7:50, almost 8 o'clock on the East Coast. Here in Korea, it is 8:50, almost 9 o'clock in Korea. So let me orient you and do something a little bit different today. I'm going to just go ahead and just give you a quick view right now, and it's perfect because we have a setup on oil where it's just moving sideways, right? So you can see the moving averages are pretty much flat. It's not a directional movement like you see over here where it's moving up. It's just kind of flat here, right? So what we're going to do is we're going to wait. We're going to wait for this thing to break either to the upside or to the downside. And once we see this thing confirm, we're gonna take a trade. But what I wanted to do was start the video off by setting up the scenario and showing you guys the basic context of the trade prior to it actually happening, and kind of the mindset of what I go through before trading day. So the other day doesn't even matter. It went up and we're bullish. Oil has been pushing up for quite some time since the last week. And you can see here, inventory for oil came out, it shot up, went down, came all the way back up again, made a nice little V formation, and is holding the sideways range, and it hasn't come back down. Not to say that it could go back down today, but the main idea is that it's sideways right now, and it needs to break out. So once we break out, and I do have these other charts, and usually I don't show them because it is a proprietary system, and I'm not trying to promote or show something that's not mine. But basically this is a NinjaTrader chart where I have these indicators in place, where these profile levels and everything like that are in place. A little bit more accurate than the Thinkorswim, which is a free version, and you can see basic idea though, right? It's you have the high value area in red, low value area in green, and low value area is support, high value area is resistance. And all you're doing based off of my system is break above resistance or high value area, HVA red, retest, buy, break below low value area, green, right, or the support, break below it, retest, sell. Okay, and that's pretty much what I do every day. Now we haven't had a setup yet because we haven't really broke out completely, and what you want to do is you want it to break out, come down into it, and bounce off of it, not like what it's been doing here where it's just ranging, hitting the lows, hitting the highs. And of course the profile levels were smaller as it was developing, but now we have a whole day's worth of a profile. So that's why we wait until about 7-8 o'clock in the morning on the East Coast, and here about 8 to 9 o'clock at night here in Korea. Okay, so if you're in the East Coast, you could do this early in the morning. And here in Korea, I have a full days of my day job at work, and I can come back from work, eat dinner, and look for a setup. And usually it ranges like this, and then we'll see something. So with that context in mind, I'll go ahead and pause the video. And once there is a setup, and once it breaks out, either way, I will restart it, and we'll look for a setup on the market profile on the charts, and we'll trade from there. All right, guys? So I'll be back in 1 second. Hey guys, I'm back. So now I have actually gold that's set up already earlier in the day. So while we're still waiting for oil to set up, I'll give you a perfect example of what we're looking for today. So as you can see, oil today has been ranging up and down, right? Same thing that you're seeing on oil, right? Gold is just moving up and down, up and down. See the moving averages, pretty flat, right? It's not kind of opening up like it did and angling a certain way, like down in this instance, and it's just moving sideways, just like we saw on oil. So as gold is just moving like this, we're either looking for a breakout of high value area, and really the high value area confluence was at the 133, and then low value area, which was probably around here at the 131. It broke earlier before, but it immediately came back up here in the morning, but then pretty much respected this area right here, and then finally broke down here around 5 p.m. here in Korea time. So that would have been about 4 a.m. in the East Coast. Finally broke down, and look what happened. Came down, came back up to retest it, and this would have been your sell, not here, because you would have waited for this to come down, and when it came back up, you wouldn't be able to sell around the 131. And you can see on my NinjaTrade charts, this indicator is very accurate. So finally broke out of low value area, which is the green area here, developing, right? Broke out. So you're looking for the signal, really pushes down, finally comes up, and I'll zoom in real quick. Finally comes up to this level, right? Around the 131, as you can see here on the right, on the price. 131, pretty much similar on the Thinkorswim charts. And then as soon as you see that happen, that's when you sell, right? And you have a 13 tick stop above there, never hit, and you short it right here, you sell right here, and we would have made right here about 10, 20, 30, 40, about 50 ticks off of this move alone. All right, so same thing we're looking for on oil is we're looking for this thing go sideways like it did here, finally break out of low value area, right? You see this, how it's inside the profile, right? We got the resistance in red, support in green, stayed inside, kind of broke out, but that was a small breakout, right? You want to see it really move like this one here, really finally broke out of there to the downside, right? Conviction away from the support, away from the green line, came back up, didn't touch it, came down even further, and that's fine, because then this retracement here would have been the retracement that we're looking for, and right when it does that, we get the sell signal as it starts to move back down. And if you would have sold right here, anywhere here along the market profile line as it came back down, you would have made about 50 ticks off of that. So with even one contract, that's $500 off of one contract just off of this move alone. Okay, so just wanted to show you basically what we're looking for today, and it's going to happen. It's going to eventually break, and once it breaks, all we do is look for a retest of market profile level, whether it's high value or low value, depending on which one it breaks, and then look for it to retest. And as soon as we see it retest, we'll be able to either sell or buy. We'll sell if it hits the low value area and after a retest, or buy if it comes down and touches the high value area after it breaks the resistance. Okay, it's simple as that, and it happens every day, guys. And you've seen my other videos how consistent it is. So that's what we're looking for. Didn't want to make this video too long, but I did want to show you that the trade setup that we were looking for, and now we just have to wait. So going back to oil, still going sideways, right? So this is great. This is perfect, because now when it breaks out, it's gonna really move. Because what have I said in the past about a sideways or ranging market? The longer it ranges, when it breaks out, the stronger the move. Okay, and I won't go into all the examples today off of this, but once it happens, the proof will be in the pudding, as they say. So we will see it in action once it does happen. All right, so oil, gold, already made the trade right there, and at this point, if you as it's moving down, you can exit out of your trades depending on how many contracts you have, and you could just let your runners run. So whatever you entered here, you just allow that thing to just keep going down until it pushes back up into a level or you get stopped out. But obviously, as you sell into this, you would move your stop down lower and lower, so at least if you get stopped out, you can make a profit off of that one last remaining contract or however many contracts you have left. Okay, guys, so we're actually touching market profile right now. This needs to hold. If it doesn't hold and comes back in, whatever you have left, I would just go ahead and sell that off, because this thing may not continue going back down, and then could reverse, right? So the setup's there, guys. We'll just wait for it. Go ahead and pause the video, and I'll be back in just a second. All right, guys, I'm back. So on my Ninja charts, I want to show you something real quick. This thing broke out of the market profile, but like what happened earlier, this thing could come all the way out of it and then just completely come back inside. If it comes back inside, that's not a valid trade. So one thing I didn't mention though is when it comes down here, it's not necessarily an automatic buy. You have to see some kind of hesitation, and you got to see like a price kind of starting to look like it wants to move up. If it just breaks out and then could just come straight back down into the inside market profile level again, then that's not a trade. So using that as an example, I'm just basically saying if this comes down into this level at the 46.28, right? And honestly, for me, this isn't a real strong enough breakout. Like I want to see something really push up, beyond here. So beyond the 39 or the 54 and close up above there, right? Because right now you can see that it went up and it immediately started coming back down. So what I would rather have seen is it to come up here, hold, maybe go a little bit higher, and then come back down into this level. Okay, and then you'll see a real big movement on there. And let me give you an example on gold. So for gold, when it finally broke down, right, it came right back up. That wasn't a trade, right? Because it came right back up. It did end up coming back down after this, right? But this was a confirmation. Okay, now we're holding below low profile area. Then you let it go. Then watch for it to come back up, retrace, and then you can sell. Even though it went a little bit into it, right? You could sell right at this area, because what happens right after that? Then it starts to go down, right? Okay. That Chiching actually is a trade on gold right now, and so I took this trade here. You see, we did initially come down, break down from here, then we came back up and touched this profile level here, as you can see, around the 27, and it held, right? It held, and then it started to move back down. So I went ahead and I just took a small position, just 3 trades or 3 contracts off of that. I'm up right now about $270, and I'm looking at targets below here. So back to the low that we just hit around the 1125. Let's say 1125 4 right here, and I'm hoping this thing comes all the way back down to this level again, and just to be safe. Yeah, we'll have it 1125.5, let's say. Okay, so right now up about 400, and it keeps $420 off of 3 contracts, and almost about to hit that target at 1125.5. Okay, let me go ahead and move it up to 1125.7. Just want to at least lock in one of my contracts. See, now it's starting to go back the other way. So okay, target filled on 1. Still got 2 more and about $420 left off of this trade. Looking for this to push down a little further. Really is not a whole lot of support here, so this thing could push down a lot, and we are kind of in the opening range right now. So, and at this point, what I'll do is I'll just bring my 2 stops below the 480. All right, so that way I lock in some profit even if it comes up and reverses against me. And what I'll do is I'll take it back up here to the 120. Let's see. It's pushing down pretty hard right now, so I'll bring it down to 126, 126.8. Well, let's see. 126.4. So even if it comes back up against me, that's $200 that I can still lock in off of that trade. And right now, from the remaining contracts, it's about $640 off of this thing. So it's moving. Let's blow this up since I am in this trade right now. Okay, kind of looking like it's gonna bounce up a little bit. So if it does come down against one more time, I'll go ahead and exit out my second one where it just bounced from. Sometimes it bounces and it'll come down and test it one more time, or it might come down and then break right through it. So let's do actually like one tick above there. So if it does come down, it gets me out. Okay. Comes back down. And this one I'm not even going to worry about now because it's running, and whatever happens happens. $600 off of 2 contracts. Looks like it's going to hit it. Hit my target, my second target. Let me show you what's going on with oil. So he got oil, right? Came up. What happened? Oh. Like I said, came up, came down, did not hesitate, did not hold. So that wasn't a trade, right? And look what happened. It went straight through. So even though it broke out, doesn't mean you automatically buy. Breaks out, has to come down here and confirm, show some price action holding it or whatever. And then as you see confirmation and moving another way, then you can start buying. Because sometimes it'll do that, it'll come back down, and then you can buy it at the profile level. But you want to see movement and some hesitation. You can see it broke out. What did it do? Automatically came back down, right? Didn't hold above this level. It should have held above that 46.48, somewhere around here, and then moved up a little bit more, and then came down after that. But you see it come up, come back down. So no trade. Scratch this one on oil. We're still looking for a setup, guys. All right. So back to gold. Now it could reverse, but should hold. So it looks like it's kind of going back down into that area. At least there's some hesitation. It's not a straight reversal to the other side. So that's not a bad thing to wait for this to come back down. If you're anxious or whatever, you want to, if you're out, hey, $600, I'm good. Plus the 170 I just made already off of that last one. So the first one was about 17 ticks. So that's why it's $170 off of one contract. Because remember, just a reminder, one contract is equal to $10 per tick on both gold and oil. So oil moves in 10 cents increments, right? So 11.24.5, 11.24.4, 11.24.3, 2, right? So every 10 cents, that's one tick, equal to one tick. Now oil moves a penny. So if I pull up oil real quick, every time it moves a penny, 19, 20, 21, 22, 22, 45, 26, that's a tick. Either way, both of them, if it moves a tick, you make or lose $10. In this case, I'm making $10. All right, target filled. Okay, target filled at the 11.24.2. So I am now up about a total of $490 plus whatever's remaining off of this thing as it moves down. And isn't really a whole lot of support under here, and we can check. So pull out, zoom out. Let's zoom out here. Last couple of days, no support, right? Could come down to these levels or push all the way back down. So we let this last one run and see how far this thing can go. Okay, guys. Go put up oil. At this point, I just keep moving my stop down. So that's was $100 right there. I had 2 contracts left, so that was $200 at the time. But let's move it down to 126, 125. Let's go down to 125.4 because we had this thing kind of move up, right? And then hold this level and move down. So every time we make another high, right, then we just bring it down a little bit above that level, right? And if it reverses against us and hits our stop, we're stopped out. But we're expecting this to kind of do a ladder and just keep moving down, right?
Stop filled.
Okay. So got stopped out on that. All right. and it could move down against us, but that was just a real quick move off gold. I wasn't expecting to trade gold. I'm trying to use the oil, but that was $680 total, 3 contracts, guys, off of that setup. Okay, and now it's reversing against us, and that's why you take profits on the way down, because you don't know when it's going to end. You know, it could come all the way back up and maybe push down again, because we are in a hard downtrend right now. But you know, the main focus today is on oil for this video, so I'll scratch this, but was able to make a quick $680 off of that trade, and that was just 3 contracts, guys. 3 contracts. So let's see. I'll go ahead and put my charts back to oil, and we will wait for this thing to set up. Okay, I'll be right back, guys. Alright, guys, so we broke out below it now. So now we're looking for this thing to come back up and test the low value area. We got a nice push, but again, we got to see some hesitation, and we got to see it touch this area and then look for a push back down. And it shouldn't push into the low value area at this point. You know, so I mean, we have this at the 45, 9, 8, 45, or 46 on the charts, on the chart. So around this area, we're looking for this to come back up and retest, and then push back down. So right now it's pretty shallow. It didn't really push down hard enough and stay down in this area as long as I wanted it to, and push down low, because now it is starting to come back up, and we might have a trade if it holds here. But if, you know, we're almost near the opening range, or during the day or time period where the oil opens up, and usually it moves really quickly. So it has to really set up and start to move away, or else it could just completely reverse on us on the other side as well. But again, right now it's doing okay. It's holding for now, and it's close enough where I guess you could technically take the trade, but you need this thing to really validate and move down to be sure. So yeah, right about now would be a good trade. But it's just didn't really break far enough for me to feel comfortable. But yeah, because you see it kind of reversing again. It's not a good sign. Because I would like this thing to really push away first and then come back and retest it. It's just too shallow for me. And the reason I say that is because the moving average right now is pretty sideways. So this just could be a lower low value area, and on a sideways market we just go back and forth, right? You just buy low value area, sell high value, buy low value, sell high value, and it just moves back and forth, back and forth. And because we're so close to this area, you know, on a sideways movement, I wanted to see this thing push down but really break down below, because we had movements like this earlier, right? I'll show you real quickly. Blow this up where it broke out of it, came back right through it, right? Broke out of it, came through it, broke out of it, came through it, broke out of it, came through it. So, you know, really need this thing to hold, and it's kind of holding right now. So there is some hesitation here, and you could take the trade, but it's just one of those things where, based on my experience, it just doesn't look good. It could completely reverse on us and we miss it. That's fine. Or we could take the trade, have like a smaller position size. Maybe just, if you do like 5 contracts, bring it down to 3 or 2 contracts if you really want to take this chance. But for me, you know, I really want to see this move one way or another, because right now it could just completely come back inside. But in a slower market right now, as you see price moving up and down, there's a lot of volume starting to pick up before the opening range. you should start to see something similar to this if it really was going to break out and then test and then move down. Okay, not like I did over here where it would break out, completely come down right after that. Here it's just it's come up, but now it's starting to kind of hesitate here. So get that price out of the way so it's not confusing. Okay, so now we're coming back into here. Yep, now we just broke back into profile, and we don't want to see something like that. We want it to touch maybe and then come down. So right now this is kind of like the line in the sand. If this goes any deeper like it did right there, not a trade. See? And that's why we don't trade those. Okay, so go ahead and scratch this again and wait for this thing to break out. All right, and this is just a lesson on being patient and waiting for the right setup, and understanding this context. Of course, I've had a lot of experience in the market, so when I see price action, I don't just jump into it and just think, okay, yeah, breakout, sell, breakout, buy. I know what to look for, and of course I have tools to help me out. And in this case, I kind of knew in context, opening hour range, a lot of volume, didn't really push away hard enough for this moving average to change one way or another, because this is really telling you there's indecision. There's no buyers or sellers really control. It's just sellers, buyers, sellers, buyers, sellers, buyers, and you really need to see this thing break out like you saw in gold, right? Broke out, really broke out and kept going, right? It wasn't just one bar, 1, 2, 3, 4, right? And then came up, and then what did it do? Hesitate, right? It didn't go up and then another green bar. It went up, immediately got rejected. Then you see it kind of come up, test it, come down, come up, test it, come down, come up, and then finally fall, right? So this is a different type of price action than what we saw on oil. Every time it broke out, came straight down, right? Came out, came down, came straight back up. So you got to understand that, and that helps, right? Right? To kind of picture it. And even if I were to draw a little block area right around where we're looking for the breakout, right? Because it was a nice little breakout here, but what did it do? Completely reversed, right? Then ever since then, never broke out. Finally breaks out. What does it do? Break out, keep moving, keep moving, keep moving, and then come back up to test this area, and then it moves down. See the difference? Okay. So we are still waiting for oil, guys. We're still waiting for oil, and you just be patient. And it could break out either way, and it could break out and keep going down and finally come up, right? But that's what you wait for. All right, that's the setup that you wait for. All right, so we'll keep waiting for this thing to set up, and until then, remain patient. And this video is going longer than I anticipated, but there was a lot of good lessons here, so we'll just keep watching this thing until it sets up. All right, guys, I'll be back in another second. All right, guys, I'm back. Oil is still ranging, going up and down, but I wanted to give you guys another lesson while we wait. All right, so in days like this, in chop days and sideways range days, it's actually pretty profitable, believe it or not. And this is how we do it. So it took a while for it to establish, so you didn't really know it was a sideways range, right? It's breaking out. This one broke out, looked like it was gonna bounce, failed, came back in. So at one point you're gonna realize, okay, well, moving averages now starting to move sideways. So what you do is you buy low value area and you sell high value area, and this is how you do it. So you come down into the first time you break out, even if you reverse back in instead of continuing, what you do is you look for this to come inside, buy, right? Then you sell at the highs, at the high value area, right? It broke out a little bit, came back inside, and then if it tests here and it looks like it's gonna come down, you can sell up here. This time it didn't, moved up against you. Okay, so let's just count the trades that were right and wrong. Right here from bottom to up, all right, then it came back inside and tested high value, didn't work, so one scratch, so one win, one loss. Here came back inside, tested high value area, sell all the way down here, right, to the low value area. Okay, once you get to the low value area, you could buy. So that would have been second winner, third winner, all the way up to here, right? Then if you would have sold here, waited for this to go down, lost for a small loss. So every winner, remember, you're making 2 to 3 times what you're losing, right? So you would have lost that if you would have traded that, but then it came back inside, came back up, tested high value, sell, went all the way down to the lows, right? Or you could have bought in here, so it would have been another winner. And then you could have bought here and bought here all the way to the highs. Okay, that's another winner, right? Came back up, retested it, and well, depending on how much you stopped, you wouldn't have got stopped here if you sold here. Okay, then you would have had another winner down here from the lows to the highs, right? And actually broke out of there, so you could have made some money on this way, but it really never touched down here, so this wasn't really a trade. Then it comes back in profile. As soon as it comes back in profile, test the high value area, sell again, high to lows, buy, low to highs, sell, high to lows. Okay, could have bought here, but didn't bounce, immediately shot back down. Okay, and then we were looking for this to come up and test it and sell. Never happened, right? So came back inside, right? Would have tried to buy here, didn't work there. Okay, came back inside again, came down, buy. That time it worked. Okay, finally broke out, and that's where we're at right now. So as you can see, there was many chances to actually make money in there, even in sideways movements. Okay, now this is the move we were looking for, guys, and you can see the difference here. And let me zoom down so you can see. All right, so now you're starting to see this thing. It broke out really hard to one side, right, and it's holding up here. And you can see that even on the ninja charts, you can see the difference in the breakout. Really far. This is the farthest it's moved outside of profile. Okay, so we're going to look for this thing to come down and either touch the 4641, which is developing value area, or the 4629, and we're going to look for a buy signal. Okay, because now that we've moved up like that and we come down, we're going to see this Fibonacci retracements. And as we wait for that and we see confirmation to buy, we can buy off of that level and see if it will bounce from there. Okay, it might take a little bit of time here, but what we don't want to see is this thing completely break right down through either. Okay, and you know, we are seeing some buyers here, but the one thing I'm not liking is that no, it's holding. I want it to really push up and then hold above there. Right, like it did here, pushed down, stayed down, and then moved down even further. This one literally had like 1 5-minute bar, pushed up, and now it looks like it's coming back down, you know, to retest it. So I shouldn't come back down too much further. It might come down to the 4641, right? Okay, we didn't buy yet. I wanted to touch or get a lot closer to these levels, so it might just shoot up from here. And that's fine, because when the moving average is sideways like this, you want it to really push up first. and then what it's going to cause is the moving averages are going to start floating either up or down in the direction of the trend that's occurring. And at that point, you'll look for a deeper retracement back down to these levels, and then you can buy. Okay. Okay, almost down there, 46.41. All right, we just broke it. Okay. Yeah, I'm not liking this right now. This could just turn back around on the other side. Well, we can give it a chance at the 46.29, 46.30. If it comes down there and it starts to shoot back up, we can buy there with our protective stops, okay? Really need to see this thing push up further. This is what happens in a sideways market. So you don't have to keep waiting for me. This isn't a live trade room or anything. What I will do is I'll pause it, and we'll see this thing kind of develop. And if a trade sets up more concretely, I'll restart the video. But I think I walked you guys through the process, and I kind of saved us from a trade. I definitely saved myself from a losing trade by talking through the process and kind of walking it through, right? So we did come down to the 46.33, which is close enough. If this thing really starts to push up, okay, because we could technically have bought right here. Let's see here. 4645. Yeah, not quite yet. Yeah, I just don't like the price action. See how it just went up and then came back down? So it's not really establishing trend. It's just still kind of ranging in between this area. Even though it's at the top of the area, it's above high value area. It hasn't really pushed up harder or long enough for this trend to really move in one direction. So I'm not really liking this too much. But if it holds this area and looks like it's going to push back up, because the longer it kind of holds an area after it moves above the high value area and doesn't necessarily bounce, but just kind of holds, then you start seeing the trend start to move. You know, if you see it finally start to cross over right here, it's kind of hard to see. Okay, now this is what we're looking for right here, actually. Right there where it actually touched it and then it finally bounced above it. So That's actually a decent trade at that point, at 46.31, where it kind of came back down. So I'll go ahead and put something right there. I don't like that it's opening range because it moves so fast that I wasn't able to get in at a good position. And that's fine. You don't have to worry and feel like I missed it, because what you want to do is you want to see this really push up, and once you do that, it's still going to come down and there's a possibility for it to test it again. But if you would have bought it at 46.31, we are now up a little over 20 ticks. That's over $200 off of one contract. I had a limit order right here at the 46.31, but go ahead and cancel that. Okay, so at this point I think we're holding up high enough, and if this thing goes higher, even better. But if not, if it comes back down and holds that level, we can buy. But really what I want to see this thing do is really push up. It really pushes up from here and kind of starts to establish this uptrend, right? And then we watched for this thing to come back down. So using gold as an example, see how when it closed down below it, it held for quite a while, right? That's about 5, 10, 15, 20, 25, 30 minutes before it actually came back up. Okay, that's when the moving average crossed over and started to open up right there. Right here we have a breakout, so 5, 10, we got 15 minutes, but we needed that thing to kind of establish and show that there is a bias now to the upside. So this I'm okay with, and that's fine, because once it starts moving away and the trend starts moving, then we wait for it to come back down, and then once it does, this is confirmation. Now that it's coming back down like this, we can look for it to come down to the low value area, and then we can buy. Okay, and this is just to give you a high probability trade. Now if you're buying and selling off those profile areas earlier, that's fine. I mean, it came down, right? We got the setup, we broke out, held up for a little bit of time, and actually went higher, right? It really pushed up, which was what we wanted, right? And when it finally came back down, right, and it tested right there, it held, right? Didn't push right through it, but it held, and then you see the signal to buy, and then it did push up. So you know, we made about 30 ticks right there on that move if you were taking that trade. we're gonna keep watching this thing, and we'll just see this thing establish itself, and then we can look for a buy. Now again, if you wanted to take that, that's fine, because again, no matter what, your defined risk is always going to be your defined risk, meaning you're always going to know how much you're willing to lose per trade. So you would have risked $130, and in this instance you would have been right, and it would have went up, and you would have made over $300 off of that move, and risking only $130. You made about $350 off of that move. All right, so that was a 3 to 1 reward to risk ratio. At this point, it just keeps pushing higher and higher. That's good. And once this trend's kind of established, then it's going to come back down, and then we'll look for that deep retracement, and then we can buy there. Alright, now it's pushing down against us. So we just keep watching this thing, and I know it's kind of boring. I mean, this is already a 46-minute video, so if you're still watching this, then you must be really interested in this stuff, because it's hard to watch sometimes if you're not really into it. Alright guys, I don't see a real high probability trade yet. Yeah, because now it's starting to push down against us like this. So we could just break back inside of profile, and then yep. And now just completely reverse. Now it's holding. Profile area is holding. If we get a confirmation, okay. Still coming down. This next candle bar could just push right down through. We'll see. Yeah, a little hard to trade this right here, so I'll go ahead and just pause the video, and I'll come back, and once we get into a trade, we'll look at it again. Alright guys, I'll be right back. Alright guys, I'm back. Now this is a long video, but I just want to show you why you gotta be patient, right? So as you can see, this price has just been chopping up and down. Like once we see a breakout like this, if it's gonna trend, it'll come down and test it, and then it'll move. But you notice how I was like kind of hesitant on the price action, right? And I really wanted to see this kind of draw away first and then come down. But then every time it came back down, this became a value area in itself up here. So look at this. You got your highs, lows, high, low, and now it's just ranging in this area. This is not a good place to trade. Now, of course, the first test, you could have taken that and you could have made, 30 ticks off of that move. But is it worth it? To me, it's not. And I wouldn't have taken a trade, and I did not. So I saved myself a little bit of grief and money. And now look at it. Now it's coming back inside profile. So we're not trending in one direction. So you got chop, chop, chop. And that's fine. Because what could happen is it could continue going up, but it could reverse completely to the other side. And if at that point, anybody that was in here and anybody that was buying here once it broke out is now on the wrong end. And then this thing could really shoot down. And this is what I'm going to look for. And I actually found an example while we were waiting to show you real quickly what I'm looking for. So look at a day like this. Same thing. Kind of range, went up, tested profile, failed, right? Broke down below, came up too deep, and then it just chopped up and down, right? Then you finally get a breakdown. Right? After this moving average started to push down, and you can see it was sideways, looked like it was going up, then it came down, and really didn't establish itself. Now it's established itself, right? So as it starts going up and down and pushing down, finally pushes down really hard right here. I'll zoom in right here, right? Finally pushes down here through the chop, right? So you got another chop area right here. Finally breaks out of there and then comes up for a nice deep retracement. Matches up with the low value area right here. And you could have sold that. And then that's when it finally moves down. But it took some time. It did take some time. So sometimes you do have to wait a little bit longer. And right now it's already 9:35 in the morning. U.S. market has already opened up. And it's just hard to trade. And days like this, you could just walk away and just not trade it. Or you can set an alarm, an alert up here and maybe an alert down here and see if it breaks either way. What I would like to see is obviously a break above here and then come back down and retest. But right now it's just been chopping up and down at the range highs, right? And this isn't something really to trade. Okay, and these are hard days, but you got to see a lot of this happen for you to kind of have an idea. And you can see, look, on this chart here, see how it kind of just ranged in between here, and now it broke above it, and now we're just ranging up and down here. This is not something that you would want to trade. Could you make money? Yeah, you can make money. Buy every time it hits the high value area, right? You're making 30 ticks off that move. Buy again, right? Made some money off of there. Buy again. So obviously the high value area is support. It's showing support. It was resistance, broke out, came back down, and now it's showing support. So yes, every time it hits this area, you could have bought at this point. But coming and testing these areas over and over again is not good, right? Eventually it's going to fail and it might break down. So if you didn't get in the 1, 2, 3, 4, I wouldn't get in at this point, right? So you just sit on your hands and you wait for something to happen, and you wanted to see this thing really push up to one side or the other. 30 ticks is quite a lot, so that's why you could have taken that. I didn't take it here because I just didn't like the price and the way the signals were showing that this might move back down. Because once it came up here, it didn't break the highs here and it just came back down. Every time it hit near the highs after the breakout, it just came back down. So that to me wasn't a good sign. Okay. I mean, eventually it's going to break one way or another. Okay, and then that's when you kind of look for it to break out. Then you come back down. It's got to make a higher high though, right? And it's got to hold above this high for me to want to buy if it comes back down for a deep retracement. But at this point, I'm not really liking it. And you can see as I'm making these comments, it's just doing the same thing over and over again. Okay, and this is where you can actually lose a lot of money too if you don't know what you're doing. So you got to be patient. You got to be careful. And you got to trade the trades that fall in line with your criteria for your trade setups. Okay. All right. So with that said, I'm gonna go ahead and pause the video. If there's nothing that happens in the next couple of minutes, I'll just close this out. And I think you got a lot of golden nuggets out of this. There was a lot of good knowledge. You were able to kind of walk through. I was able to walk you guys through the thought processes. I mean, we made a small profit, $680, but we made it off of gold. and it was a proper setup, right? Here we don't have a proper setup yet, so therefore we don't trade, and that's how you actually make money, when you don't lose money, right? So I'll keep my $680 in profit, and I'll hold on to that for now, and we'll see what happens on oil. If there's anything that sets up, we'll restart the video. I know we're already an hour into this, so thanks for watching, guys. And if it doesn't work out, it doesn't work out. Okay, now we're starting to make new highs, so this is good. So at this point, now that it's really pushing up, okay, I know some of you guys who thought, hey Joe, why don't you just buy here and hold on? You're kicking yourself in the butt right now, because you could have made, you know, at the 30, 41, 51, 61, 71, 81, about 91. So that's 60 ticks already off of that move, right? So that's fine. I mean, I don't have to hit every trade, but the lesson here is, again, breakout, retest, hold of high value area, and buy. And what it do, it moved up, and it actually gave you several chances, right? If you really wanted to hold on, and that was your strategy, that's your trade plan, that's how you trade, then you could have traded it and then just made about 60 ticks right here off of this move. But it's good to be able to see this live, right? Okay, so what I would do right now is I would wait for this thing to come down to possibly the 46.63. Okay. And if there's a signal at the 46.63, or it comes back down to the profile level, or even down here at the 56, this area, I'll look for this thing to come down, retrace, and then we can buy there. All right. So we'll see if it comes down and retraces deep enough off of this move. But now you're starting to see the moving averages are starting to curve up, right? Okay. So that's good. Because then if it comes back down, right, then we're gonna look for a buy entry as it comes back down to retest these support levels now. All right. So I'm gonna go ahead and pause the video. I'll be back in just a second. All right. All right, guys. I'm back, and I'm kicking myself in the butt. We just made 100 ticks off of that move. So if I would have got in back here, so let's zoom back out. Okay, so we had a couple of chances to get in. So we finally broke out, retested high value area for the first time, and if we would have bought in here at the 46.31 to 33, once we start seeing confirmation and held it, although it did kind of chop up up and down. This is why it's different to talk about in hindsight and a lot harder to do in real time. But if I would have bought in here, right, and held my 13 tick stop below here at the 19, 18, somewhere around this area, watch, never touched your stop. So if you would have risked it once, your $130 per contract, and I was going to do at least 4 contracts today as an example for this video, would have made about $4,000 off of this move if I would have held it all the way through, right? And that once it really took off, it took about 5, 10, 15, 20 minutes for this thing to move almost 90 ticks from 46.41. You see this candle bar right here moved all the way up here about 90 ticks in 20 minutes. That's insane. That's the volatility that I keep talking about in my other videos, that once the market moves, it moves really far and really fast. So for one contract, you could have made $1,000. 4 contracts, $4,000. And in the past, when I'm normally trading about 10 contracts, $10,000 once it really took off in 20 minutes. But of course, you had to hold for about about a half an hour, going back and forth while we're making this video. But you can see same concept. Once you break high value area and it holds, right, and it did hold, right, and actually, you could look at it a different way and say, Joe, the market gave you 1, 2, 3 chances or more to get into the market every time it tested it, and you didn't get in, and now look what you missed out on. But it moves back and forth every day like this, so there'll be plenty of opportunities in the market. Unfortunately, I didn't capitalize on today, but I still made money. Made my $680 today. Now another trade we can look at is once this thing kind of really trends up, we do have some news that's going to come up in about a few more minutes, and I mean, it could do something crazy and it could just come down and reverse. If it does come down and reverse and hits this low value area really quickly, right? Once this uptrend is established, and sometimes the market does that, it'll come down and retest it really quickly and hit the 45.98 and possibly 45.85 area, somewhere between here. As soon as we see that and it starts to come back up, we can buy, and that's another trade setup, and usually those are really strong because you can see that the trend is now starting to move up and establish itself, and it reverses on you really quickly like that while the trend is still up. Then you can buy it the first time it tests it, and then you could go all the way back up at that point. Now if it comes down here and breaks below here, then you're going to have to look for it to come back up and sell, right? Because all these buyers are now in the wrong position, and at that point you're going to have to look at the opposite side of the trade. Okay, but bottom line, guys, is that was a $1,000 move off of one contract, and the setup clearly worked. Breakout of high value area, and what did I tell you? I think at the beginning of the video is you have a sideways range, and maybe this is not the chart to look at here. Better chart would be here. You got this sideways range here, right? And it happened all day. Happens all day. Alright? And I can just draw a box like that, and literally respects the lows, respects the highs, right? Lows, highs, breaks out, comes back in. Touches the lows, comes out. Finally breaks out above it, comes back down and retests it, and that's why you have your stops. And I should have taken it. In hindsight, it's a lot easier, but I'll be transparent and real about it. Wasn't exactly the easiest trade to take. Something like this would have been great, where it breaks out, comes back down and retests, and then you buy, and then just keeps going, right? In this case, it just kept chopping up and down. I didn't like that price action, although it did hold, and that's fine. Because here's the thing: if you would have risked $130 per trade and never hit it, first of all, but that's in hindsight, okay? I'll be honest here. But if it did come against you and you took that first test, right? It never would have hit your stop. But if you would have held it at when it came down to 131, right, or 46.31, and bought it right here, the first time test of this area, and you bought, you would have been fine. You would have made money. You would have made 30 some ticks off of that if you would have exited. Obviously, every time it went up and down like that, it would have been hard to hold, right? Because you wouldn't have known. I know now it moved over 100 ticks, but what did I know at the time when I was talking to you that this thing could move up? I didn't see that. I didn't see the potential, right? It wasn't as clear. And days like that, because you never know. The market could have done the opposite thing and then stopped me out, and I could have kept trying to get in, because you think you could have got in 3 times. Well, I could have kept going in and kept losing. It didn't happen, but it could have happened. The main thing is that I looked at the probability here and I said, it's not worth taking, right? And of course, in hindsight, you kick yourself and you say, I should have taken it. I should have had enough patience or balls or whatever you want to call it, and held on to this trade, and I would have made 100 ticks off of that. And how great would that have been to capture that on video. But that's just not part of my trade plan, and my trade plan is to not catch every awesome move, but have a high probability trade that will catch an awesome move, but also at the same time have the risk management to hold on to my profits and cut my losses short. Now the lesson that I learned here though is when it did hold like that, I should have just taken the trade, and I should have just held my 13 tick stop loss right below here, and let the stop loss respect itself, you know, and let the probabilities play out, because that is part of my trade plan, is to just let the probabilities work out, right? Because your reward to risk, you're always looking at a greater than, you know, a 1-to-1. So that would have been a 3-to-1 up to here as it tested it multiple times, and then now, you know, you had a 10-to-1 reward to risk ratio off of that trade, and it never hit your stop. But you were willing to risk, you know, $130 off of that trade in order to make, you know, 8, 9, 10 times that if you would have held it all the way up here, right? But it's not always easy to do in practice, in real time, that is. But I hope I was able to capture that for you guys. Gold, on the other hand, you know, nice trade where we just broke out. Price action worked out the way we wanted to. Came up, sold right here, and, you know, kind of like a mini chop like we did over here on oil. But those are huge moves, right? As this was tiny little moves where it was just kind of holding this area and then finally broke down low, right? But look at oil. Broke out, came back down, retested it, came up really big, came down really big. Literally reversed the entire move that went up and then reversed the entire move that went down, right? So there was a lot of battling going on. The bulls, the buyers ended up winning, and once they took off, you know, that was pretty much where this oil price continued up. Now let's look at this analysis. Now this price action right here, we could have looked for this long here. Let's look at the NinjaTrade chart to give us more accuracy and where we could have gotten in. Let's see. So right here came back down to the 46.70, 72. So that price action would have been right here, or actually took off and came back down for Fibonacci retracement. 46.73 came down, confirmed around 46.75 to buy with these green arrows. And I'm not going to talk about the details of that because that's a separate indicator there. But basically that right here, you could have actually got in the market at the 46.72. So that still would have been 10, 20, 30, 40, 50, and now 60 tick move just off of that trade right there if you would have held. And it can be scary, but the one thing that I failed to do, and what I should have done, was just allow the probabilities to work out itself. Because one thing I always talk about is you don't know how much money you're going to make on the reward side, right? You're hoping to make, you know, more than a 1-to-1 reward to risk. So you're always setting profit targets 2-to-1, 3-to-1, 4-to-1, and scaling out as you go, depending on the price action. But you always know how much you're willing to lose, right? So if you're willing to lose $130 down here, right, per contract, never would have happened, right? In hindsight, came up here and retraced, and you see the buy signal here as price action moved up. You would have taken $130 stop below here, or 13 ticks below here, never hit it, kept going up, right? And every time it retraced back, and that you notice that in a trend. Eventually the trend's going to end, right? And then you're going to have a buy signal, and then eventually it's going to turn over like it's kind of doing right now. And then these areas that you would have bought would have got, you know, stopped out. But right now, you know, you had actually one big chance down here, 2, 3, 4 chances every time it pulled back, and you could have got in the market using this indicator that I have here. But the main thing, actually, how to trade is always a first test. So anytime it breaks out, first test, then you profit as you go up and scale out. But would have been very difficult right here, right? So my trade calls for the first test. Our trade system calls for the first test. But again, you know, if you knew that the market, because it's so volatile nowadays, it's worth taking this risks, because you're only risking $130 per tick, per contract, or per trade setup. And if you did that, you're actually still going to make that much more, right? So your reward to risk potential is so great that you're willing to take that 130 tick loss or chance or risk on each trade. That's how you got to really think about the market and what I failed to do today. I'm sorry about that. I wish I could have made, the 100 ticks off of this move and shown you a great trade there. But I've done that before. I just never had to comment through it, and it's something new for me as I'm walking through, and maybe next time we can do that. But this is a long video. I wish I could summarize it, and maybe I will in another video. But the main thing is you were able to walk through it, see how this thing works live, right? Of course, in hindsight, it's a lot easier to talk about, but the trade setup off of market profile still the same, guys, right? Sideways range, breakout, first time test, buy on high value area, and it took off. It wasn't a clean trade. It didn't automatically just push up. It kind of ranged for a while up here, but you can see how that works. And again, the main idea that I talked about, and what I should have done was just taking the trade, because what did I say? If it does finally break out, it's going to move really, really hard and really fast. And I mean, it chopped around here, but once it moved, look at it go, right? And we were able to see a 100 tick move like that. And that normally doesn't happen all the time. It's happening nowadays, but it doesn't always happen, right? But again, the one thing that you can take away is if you have a sideways range like that and it's pretty much like all day like it did today and finally breaks out, those are going to be your best trades, because it's going to be very strong on that onto the other side. Okay, it's like a ball being compressed, or spring being compressed. Just imagine the spring, it's being compressed this whole time. All that energy is being stored up. Eventually, once it goes to one side, it's released and then it just takes off, right? So we're seeing that now. Alright guys, with that said, I will close this video out. Thanks for watching if you watched this entire time. I know it was a long video, but hopefully there was a lot of good things that you guys could have learned from it. And it takes about an hour. Let's say, if this was my trade, I mean, it was a little bit longer in real time, obviously, because I paused the video, but it was about an hour long, hour and a half for me in real time, closer to 2 hours. To watch the setups and trade gold and miss out on oil like I just did, but the main thing is it's about an hour's worth of work, and I made about $680. Could have potentially made about another $4,000 off if I traded my 4 contracts there, but the main point is the trade setup works, right? And 2, it doesn't take that much time to day trade and make a lot of money, right? $680 in a matter of 15-20 minutes that I made earlier, that's nothing. It didn't take that long, and I didn't risk much. It was just 3 contracts, and in this instance, if I would have traded 4 contracts, you would have made a monster day. You made $4,000 in one day. And then, so the first thing again, like to review, is the market profile breakout strategy works. The setups work. And if I would have held with the $130 or 13 tick stop loss, it would have also held, and I never would have lost money there, no matter how many times it retested. And the last thing really is it only takes hours worth of work to make that much money. Some people work all month to make $4,000. With 4 contracts, risking a little over $400, almost $500 off of that trade, you could have made $4,000, right? $500 on the table to make $4,000. I take that. I take those bets anytime. All right, and you see this every day set up. All right, guys. So go ahead and close this out. Thanks for watching, guys. I'll make some other videos a lot shorter. Today I wanted to try something different, but I think we were able to capture a lot of lessons here, and it was live market. It's a lot different when I start the video and it's already going, right? But now you're able to kind of see it move and take a lot of lessons out of that. So with that said, I'll close it out, guys. Good night, and I'll talk to you guys soon.